On this show, we get you everything that you need to know about your money. Specifically, we get you actionable insight so that you can take your big money decisions with confidence. First of all, I'd like to wish all of you a very happy Independence Day. And as we celebrate India's 75 years of independence, I'd like to discuss a very powerful concept in personal finance, that of financial freedom. A large number of people that I've met love their jobs. They find the work fulfilling and they certainly enjoy the salary that they're bringing home. But even these individuals sometimes face the Monday blues. Those days when you just wish that you didn't have to go to work, have a job. But then they think about the EMIs that they have, they think about the funds that they need to pay for their children's education, and then they drag themselves out of bed. In a sense, you can say that they're wearing shackles. And the key to breaking out of those shackles is financial freedom. To talk about this very powerful concept, I have with me Feroze Azeez, Deputy Chief Executive Officer of Anand Rathi Wealth. Thank you so much, Feroze, for taking the time. I think depending on who you ask, you'll get a different answer to this question. But what, according to you, is financial freedom?
Alex, I think financial freedom has different connotations for each of us, right? But there's one mathematical way of defining it. There's one which is very specific to each one of us. If you ask me, financial freedom is going to a restaurant, opening the menu, not seeing the right side of the menu to find out the price. On the left side, you look at the left side of the menu and order. But if you give a mathematical answer to it, if you have 5 goals, if you find out the present value of those 5 goals, let's assume you have the conventional goals, marriage of children, education of children, retirement, you discount them and find out what's the present value. Let's assume the present value of those goals comes to 2 crores. And if you already have money greater than 2 crores, then you have attained mathematical financial freedom. Emotional freedom is a separate story. But I think this is one of the most important ways to comprehend whether you've reached that stage where you can say you're financially free. And like Alex, you mentioned that you drag your feet to work. That doesn't happen then. Then you go into work because you love that job. And a Monday, Tuesday would not be. You'd be indifferent about the day, right? You're so right and so practical that on a weekend you've relaxed, and Monday is one of the toughest days to get to work, and your passion will be high if you're not compelled to. And that's something which you love doing.
Can the average Indian achieve financial independence?
Yes, I'm sure an average Indian, and I can proudly say that average Indians would be able to achieve. But the caveat there is, with the current level of planning I see when I meet people, the answer is no. It will require a plan, it will require discipline, it will require foundation, it will require enthusiasm to actually stick to the plan, because investing is about 10, 20, 30 years. You get bored of so many things in 6 months, right? So investing is 34 years, so 30, 40 years. Can an average Indian do it? Definitely. Second, not at the current level of plannings which you see. Like if you speak about a US kind of scenario, everybody's investing, and ancestrally people have been investing. In India, it's not a practice. So I think it's possible, and how to do that is about 3, 4, 5 important variables.
Let's talk about those variables, right? Because, and we're playing some of that on the screen, but why don't you take us through what an individual would need to do? What should they start with?
See, to my mind, first thing is you have to set a goal. Financial freedom has to be measurable. It can't be subjective. So have a goal. Decide your expense and your income. So what's your ratio? How much are you earning and how much are you ready to invest? Because the difference, income minus expense, is what is your investable surplus. Ascertain that. Try and expand that. The third thing is create a monthly budget. Most of us spend on the go. You have to have a monthly budget so that you can measure and see whether you're going to spending a little more just because of an exciting offer on a commodity which you always envisaged you will own. So that's the third part. Choose the right asset. Don't get carried away with what you see or hear. Choose the right asset. Respect the assets which have stood the test of time. Equity has stood the test of time. Real estate has stood the test of time. That's the fourth thing. The fifth thing is preparing for contingencies. If you don't prepare for contingencies, be rest assured God has another plan as well. So it could be that some exigencies can put all your planning off track, and that shouldn't happen. And then your entire financial freedom gets deferred by another 75 years maybe. So please make sure that you plan for your contingencies, review and take corrective action. See, what happens is when you are on a track, When a pilot starts flying a plane, he is going to check whether he's going on the path desired. So making sure that you have a great information system, management information system, a report to tell you whether you're making any mistakes. And we are all human, we're going to make mistakes, but you have to correct them sooner, then it creates more damage, which is irreparable. So these 6 steps, if you're passionate about, it's quite likely that every one of us as Indians can achieve financial freedom.
Fantastic. I also wanted to elucidate that, so I gave a case study. But before we get that, or rather get to that, there's something that I think a lot of people throw their hands up and say, Feroze, I'm earning 30,000 rupees a month, and you want me to take 30%, 40% of that. How is this going to be possible? I have this expense and that expense and this expense. Is this something that you have to decide and say, for example, this is something that I have done, and unfortunately, I've only done it for the period that I've done personal finance, which is the last 5 years, and I wish I had started earlier. Which is to say, as soon as my salary hits the account, I will transfer a certain percentage of that, 35% into another account. I've lost the debit card, I don't know where it is, and use that only for investments. Is that the approach that works?
See, one size fits all, it doesn't work here.
Yeah, it doesn't work.
But it's a great idea, it's a great suggestion, because if you carve out some money, then it's the likelihood that you will be able to spend that, not spend that and invest is very high.
Yeah.
If people believe that they have a 35,000 rupees salary and they can't start investing, they're mistaken, right? I'll tell you my first salary, it was 9,400 rupees, 2004. Even if you add inflation, that's the number which you're speaking about, 30,000 rupees. So point is, even if you have 30,000 rupees, please believe that you can invest 1,000 rupees. Back then, 1,000 was the minimum. Today, even 500 is permitted. So it's a very affordable mutual fund platform where you get 50 stocks for just 500 rupees. That's like 10 rupees a stock. So please believe that you can do it. Start somewhere, because this is not going to move the needle, but it'll imbibe a practice of saving. That's more important when your salaries are 35,000. If you imbibe that practice when your salary is 1 lakh, that's going to carry on for ages as a legacy. So that's point 1. Now, if you look at 35,000 rupees, is it possible to save 1/3 of the money? To my mind, yes. If you're able to save 1/3 of the money, that's 10,000 rupees, you will get to in 30 years, 3.25 crore, even at a 10% growth rate or a 12% growth rate. In 30 years, you will get to 3 crores. But if you look at the practical side of how the corporate world or any structured employee works, is there's a marginal increase in your salary every single year, especially in India, unlike in the emerged countries. So if you step up your SIP just by 10% more than what you did last year, you will get to 8 crores after 30 years. Of course, 30 years is a long period, but 8 crores is a lot of money as well.
Yeah, certainly. And, while we played those graphic points on the screen, I also want to point out that if you manage to do 30% of 35,000, like you said, in 4 years, 5 years, 7 years, when your salary does hit that 1 lakh mark, you're going to be able to save 35,000 rupees or thereabouts, right? Which is a humongous amount of money, and you've already gotten into the groove of saving 35%. And then you think, okay, I have that much less. But the beauty of that, what I've discovered, Feroze, is that there is no guilt at the end of it. When you say that you've already allocated 35%, and then you have to say, hey, you know what, I need the newest PlayStation 5, or I need the newest gadget out there. Whatever is left in your savings bank account, you can use for that, right?
So right, Alex. Actually, if you think of it, you have to do net practice, right? A a great batsman doesn't become a batsman just because he thought he plays well and he played in a simulator. You go into the net, you practice it. These are practice years. That's very, very important that you practice to save. And I think that's what is what you're saying, Alex, and I can't agree more.
Yeah, the numbers that are playing out on the screen, I just want to point that out again. I sent this to Feroze and his team, and 35,000 rupees, he's saying that you can save 30% of that. If you do save that and you put this in an SIP for a period of, this is for a period of 30 years, right? You can achieve as much as 3 crore. But if you increment that, and this is exactly what he's pointing out, if you just do 10% more every year, this is not a big stretch, and you can achieve as much as 8.3 crore, which is a far cry from what you would have achieved if you had done just 30% of 35,000 rupees. There are certain factors outside of your control, Feroze. People who've gone through the financial crisis will know markets can crash very dramatically in a very short period of time. Assuming that you have achieved financial independence now, financial freedom, and you're kicking back and you're not worried about the funds. But what if you see a massive drop in your portfolio, in your corpus, overnight 40% drop in equities? How do you deal with something like that?
You deal with something like that, very, very, very practical question, right? You've achieved financial freedom and something happens to the market, you've come back below the threshold where you believe. So when you have achieved financial freedom, if you stick to your asset allocation, now for example, when we recommend a portfolio, Alex, I'm again going back to how we recommend our portfolio, we back test it and see if during the global financial crisis, if I did the same portfolio, where would I be?
Right.
If you get an answer that you're falling 40% equal to the market, then you have something wrong with your portfolio.
Right.
Design it such that you don't go down more than 10-15% on a 2-year rolling basis or a 3-year rolling basis. If you're able to create shock absorbers in your portfolio to the extent of a smooth car ride, then you're okay.
You know, the other thing is that, and I'm hoping to achieve that at some point, Feroze, so maybe this is advice for me as well. I'm sure you interact with a lot more people that have achieved this financial freedom. In a sense, it's nirvana, right? Because you're not really thinking about the job that you need to go to. Like I said, the shackles are broken, you're free. But it's how do you figure out what to do next financially? Of course, in life, you can go out for walks, you can hear the birds, you can do all of those things. But financially, you have a large amount of money. How do you deal with it?
Yes, Alex, actually, your question sets me thinking. I've met several thousand HNI families in the last 18 years, and I still can't remember one person who has achieved financial freedom, because most of them have achieved. If somebody's got 5, 10, 15 crores, most people's goals are going to be lower than that. So, and I don't know one person who sits back home and just goes for walks. So the people who have not achieved financial freedom assume that they will be free and not work. And the people who have achieved it, I can't even recollect one who says that I do nothing. Point one is, when you've achieved that financial freedom, you have to think of objective 2, objective 3. If you have achieved objective 1, which is achieve financial freedom, grow your money at good quality, high inflation beating returns. The second objective, important to make sure that you start training the next karta. See, it's going to be a certainty that all of us have a finite life. So when we leave, we will have to designate somebody else to take the legacy forward. Just like a company, I'm the deputy CEO. My CEO designated me, saying that if something were to happen to him, there's somebody else to take the business forward. Similarly, you have to take the legacy forward. So train the other person. It'll take you 5-10 years to train him or her. Making a will, making sure all the loose ends are tied, then you can call that you're doing great management. Management is about tying all the loose ends. And I think that's where you move ahead from the first objective to second, third, fourth. Now, the fourth one could also be philanthropic in nature. And so many HNIs today say no money is enough if you wish to give in a country like ours.
Certainly. And I take your point, and this is something for me to reflect on, because as they say, the grass is always greener, and I'm sitting and dreaming about, listening to the birds and all in the morning, but I will be back to office on Tuesday morning. Feroze, thank you so much
Thank you,
for taking the time. Always a pleasure.